You're 65 years old, ready to retire, and you look back at your life. Do you see freedom, wealth, and choices, or regret for opportunities you didn't take? Here's the truth: the decisions you make in your 20s about money can define the rest of your life. There's a secret weapon that can make your future self thank you 1,000 times over. It's called compound interest, and it has the power to transform your financial life. But here's the thing: every year you delay is money you'll never get back. So, grab a notebook, because what I'm about to share will not only inspire you, it might just change your life. Let's break it down. Compound interest is the concept of earning interest not just on your initial investment but also on the interest you've already earned. Imagine planting a tree. Over time, not only does the tree grow taller, but it also starts growing branches, and those branches grow leaves, and those leaves turn into fruit. That's compound interest at work. Now, here's where it gets crazy. A small monthly investment of just $100 starting at age 20 could grow into over $500,000 by retirement, assuming an average 8% return. But if you wait until 30 to start, you'll only have about half that amount. Think about it: your 20s aren't just for brunch and binge-watching shows. They're also the prime time to set your future self up for financial success. But here's the catch: not all investments are created equal. Let's talk about where to put your money to let compound interest work its magic. If you want to harness compound interest, the key is to invest in assets that grow over time. Stocks, index funds, and ETFs are some of the best options for young investors. Why? Because they have historically provided higher returns over the long term compared to savings accounts or bonds. For example, investing in the S&P 500 index over the past 30 years would have given you an average annual return of about 10%. Compare that to the 0.5% return you get from a typical savings account. Which would you choose? Unless you're saving for a lifetime supply of avocado toast, keeping your money in a savings account just won't cut it. But wait, how do you even get started with investing? I'll show you a step-by-step guide next that even a total beginner can follow. Starting early is easier than you think. First, open a brokerage account. Platforms like Robinhood, Fidelity, and Vanguard are great for beginners. Next, set up automatic contributions so you don't have to think about it. Think of it like paying your future self first. Even $50 a month can make a huge difference over time. Remember, the goal isn't perfection, it's consistency. Every dollar you invest today has decades to grow and compound. Your future self will thank you, trust me. But what if life gets in the way and you need the money sooner? Don't worry, I've got strategies for that too. I get it, life happens. Maybe you're thinking, I'll start investing when I earn more, or I have student loans to pay off. But here's the deal: waiting until you're ready often means missing out on the most important ingredient for compound interest: time. Procrastination is like robbing your future self, and trust me, they're not happy about it. Let me put it this way: every year you wait could mean losing out on tens of thousands of dollars in the future. Do you really want to let that slip away? And what about people who think it's already too late? Stick around, I've got something for you too. Here's the final piece of the puzzle: consistency beats perfection. Even if you can only invest small amounts, doing it regularly will have a bigger impact than waiting for the perfect time or trying to time the market. Think of it like working out. A little effort every day adds up to big results. Compound interest works the same way: it rewards patience and discipline. But what happens if the market crashes? Let's address that fear right now. Market crashes can be scary, but here's the truth: they're temporary. Historically, the market has always recovered, and those who stayed invested during downturns often came out ahead. The key is to stay focused on the long term. Don't let short-term noise distract you from your financial goals. Remember, panic selling is like abandoning your umbrella during a rainstorm because you're already wet. Still worried? Let me show you how to create a safety net so you can invest with confidence. Here's the bottom line: compound interest is one of the most powerful tools in your financial arsenal. But it only works if you start now. Don't let fear or procrastination hold you back. The best time to start investing was yesterday. The second best time is today. Your future self is waiting for you to make the first move. If you found this helpful, check out my video on 5 mistakes to avoid when starting your investment journey. It's packed with tips to help you avoid common pitfalls and maximize your returns. Click here and let's keep building your wealthy lifestyle together. See you there.